Hello, everyone, and welcome to Office Hours for TradersPost on this lovely day of May 31st, 2024. Last day of May. We're heading straight into a glorious summer. You wouldn't know that from the Bitcoin chart, but hey, that's how it goes sometimes. My name is Tom Hartman. I'm part of the marketing team here at TradersPost, and I'm joined as ever with Mike Christensen. How's it going, Mike?
Excellent, Tom. Feeling pretty good. Coming into summer is always exciting.
Well, I'm not a big summer people. I'm from Montreal, Canada. I like my cold because no one ever asks me to do anything when it's cold, which is exactly what I want. I live on the internet.
I love it.
Sometimes I feel
Good
like my
reason.
answers are always antisocial when I talk to you, but I'm a very friendly person. I should really make that clear.
I figure it's like, you choose when you want to be extroverted, right? And instead of just being naturally introverted. So I
Exactly.
get it. Yeah. Yeah. I'm totally with you on that.
So for this week, we have a nice crop of questions, but I figured we start off with an interesting little drop from TradingView a couple of days ago, which is the options chain or an options tool that they're releasing in beta.
Mhm.
Have you had a chance to check this out at all?
I played with it a little bit. I don't think there's anything like substantially unique there in terms of the tool itself or what it really provides. That said, it is nice to see that TradingView is moving in the direction of supporting options. If we get to a point where options chain data, the Greeks, and other types of filters are available within PineScript or even within the chart, I think that's going to be a game changer. An options analysis tool. This is fairly common. Some of these types of time charts that give you a sense of the value of your contract over time are fairly common. You can find these with most brokers, but it is a great tool to see in the environment. There's no question.
Yeah, I was playing around. Sometimes they'll drop within the documentation some of the functions and methods they're gonna have in the future. I haven't seen anything that touches on this yet, which I guess to me makes it feel a little bit uh, good and bad because then there's an opportunity for PineScript developers to be like, okay, we'll develop the tools that we need and gain popularity that way.
Mhm.
But dang, I wish we just had the implied volatility, at least implied volatility. If they had that on the accessible, that'd be great. But hey, baby steps. That they're
Baby
doing this
steps.
at all is fantastic, and it's always been my opinion. The number of people that I speak to within the retail trading space who don't know anything about options scares me, given the fact that it's long been said now that the options market or the derivatives market is larger than the underlying, and so
Yeah, that's a tough one. I mean, yes, that's true from a notional perspective, but that's how leverage works, right? It's significantly bigger if you calculate the market value of it all.
right, but then it also the price, the underlying price ends up moving because
Because
of
of
it.
those markets. Yep, the activity definitely has an impact on the underlying. There's no question.
Yeah, so I love that and seeing the at least the gamma here is it's pretty interesting, and now I have something to point to that's not like a that looks like a Jupyter notebook that I can actually point to a client where they can look at it and not roll their eyes at. So I'm pretty happy about that.
Yep, yep.
All right. Next up, we have a question here. Where someone was asking on Discord if there's a limit to the number of subscribers that a strategy can have. Um, I don't know. Have you ever gotten to? Is there an upper limit on that? I mean, technically, yes, but
I mean, obviously there's a theoretical limit somewhere in there.
right.
We have run into larger groups that are sharing a strategy with hundreds of members, and it resulted in thousands of consecutive trades where every few seconds they were sending in additional trades, and we had to work directly with that broker for them to interpret what it is that we were trying to do or what that group was trying to do, and then I think they literally made hardware changes and software changes to support those trades coming through. The broker is, of course, not going to want to reject orders or say, no, you can't trade here, because obviously, especially in futures, every trade is valuable to them. They make a commission off of every single one. So ultimately, there are going to be some limitations, we'll call it acceptable use limitations that the broker can accept. But on our system, we don't explicitly have a limit to the number of subscribers, but we are going to be monitoring for number of trades. The number of trades that come through have a big impact on a number of results in your performance as well. The the thing we constantly bring up is this concept of race conditions, where if you're sending in a bunch of signals all at once, it's likely that one might get sent through before the other and cause your system not to work. So I think we put preference on having limitation for the number of trades, not necessarily the number of subscribers. If you have 3,000 subscribers and they're all taking the same trade at 7:30 in the morning, or my time, let's call it 9:30 Eastern, right at the market open, that's probably okay. But if you're sending through 3,000 trades every couple of seconds, that adds up and it becomes much more complicated. So at the moment, no specific explicit limit, but let's chat if you get to a really big scale.
It's a good problem to have. Uh, Reminds me of there's a question I saw where someone was asking for the JSON payload message. Is there any limit to how many custom properties some can send along with it? And John was like, "Well, I mean, no, but can I see what you're
Yeah,
trying
what
to
are you trying to
send?"
send? If it's
Uh,
like a megabyte worth of data, yeah, that's going to get pretty crazy. There's bandwidth considerations there at some point if you're sending through a ton of signals. So yeah,
Never underestimate how a client can test the limits of what of your systems. They'll always
absolutely.
find the thing that like why do you want to break it? Because I want to know if it can be broken. Hey, come
I didn't know I couldn't do that.
on. All right, next up. So it's along the same lines. To avoid race conditions, is there a minimum amount of time that someone should be thinking about to allocate between signals? There was an issue that came up where someone was sending multiple signals and then it ended up with an inconsistent trade. And I was just wondering if it's like if someone's sending something at the same or to avoid sending at the same time, are we talking about seconds, minutes that they should have between trade execution?
Yeah, I think we generally recommend in the like 10 to 15-second range, just to leave enough time for not only the signals to come through from TradingView, but us to wrap that up into an order with your broker, for your broker to respond to that and for the trade to fully be expressed before you send the next signal. That said, there are circumstances that I think are really important to people where they need all their orders to kind of come in at the same time. And that is usually around the subject of take profit and stop loss orders. So we always recommend that you attach your take profit and stop loss order with your entry order so that all three get executed with the broker at the same time. And we can send orders that way to the broker in most cases, as long as that broker supports it. And when that happens, then it's already with the broker. It'll get executed quickly. You won't have much to worry about there. But if you're trying to send a buy and a sell and a buy and a sell and a buy and a sell, all within seconds of each other, there's a pretty high possibility that one of those might get out of order and you end up in the wrong direction in your trade. And that's not really recommended. So probably a 10 to 15 second buffer is like the absolute minimum. I tend to trade on much higher time frames, somewhere on the 1 or 2 hour chart at a minimum. I just think personally that the market, if all markets are fractal and all systems are tend to be fractal on multiple time frames, why spend all this money trading on the really small time frames like a 5-second chart? If that trade is going to show up on the larger time frames, you'll have less commissions that you pay on the 1 hour chart, and you'll be in the trade for longer, improving your odds of success. But that's just my opinion. People like to trade all kinds of stuff.
Have you had the difficulty of explaining to somebody, hey, you're trading the 1 minute, but your strategy is not specifically doesn't specifically require that. Like why you're doing? I find it very difficult to talk people out of who are in a 1 minute time frame out of that into a 1 hour time frame. They seem to think that they're losing opportunity, and to me, it's just like so much more risk on the shorter time frame. I just don't understand.
Yeah.
Um, have you ever been in that situation?
I mean, sure, I've been in it, but it was early in my career when I was thinking more from a, exciting, this trading's supposed to be this like,
Right.
gambling kind of environment. And I think the emotionality of it is what I was attracted to. You want that quick win. You want something that, I want to get in a trade and make $5,000 in 15 seconds, and be able to tell my friends that I made that kind of money.
Right.
When you get realistic about your goals over time, because that's an extremely difficult thing to do successfully and consistently, you start to realize that being able to measure the market at higher timeframes and slow down your expectations and maybe level set your expectations puts you in a point where what you're really trying to do is capture what the market is really saying. And it's sort of like, the signal on the smaller time frames is just a whole lot of noise. There's just a lot going on. The candles are all over the place. You can't really tell what the story is on the chart when you're zoomed in that closely. But the further you zoom out, the clearer the story becomes, and that has helped me stay in trades longer.
If it wasn't for my understanding of options, I think I would still be stuck in the intraday time frame, because you'll look at the volatility from like close to close, and it's like low volatility, but the intraday volatility could be insane. You're like, what is going on? Well, then it turns out the dealers are moving the prices around in order to get the options to expire where they need to expire. And so when I got to that, once I understood that, then I was like, oh, okay, now I'm being ridiculous. But the I guess I could understand it, because if I'm playing chess, I want I play the like 1 minute, 3 minute chess games, as opposed to one move a day, 3 days, 7 days, because like you said, it's not exciting. But now that I see the excitement in second guessing my the move I made 2 days ago, I'm still getting the emotions that I need without having to pay for each trade. All right, perfect.
I think maybe one other point to add to this too. There's a really, really good book by Annie Duke, who was a professional poker player for a very long time. She wrote this book called Thinking in Bets.
Yeah.
And another like big insight that I gathered from that book was this concept of being able to tell the difference between skill and luck. And particularly in markets, it's extremely difficult to tell whether or not your trade was due to luck or due to skill. I think, in my working theory, particularly with the way that I trade and some of the longer time frames, is that if I were zoomed in really close on the charts, the amount of volatility that exists there, and especially if my stops are really tight. We spoke to a customer the other day that wanted to trade one tick at a time, and it's like, that's not going to work. First off, you're going to spend all your money on commissions with every tick, but also you're so tight that every price swing is going to get you potentially in the wrong direction, right? There's just so much chaos when you're zoomed in that closely, that if you were to catch exactly the right trade, was that skill or was that luck? That was
Right.
probably luck, that you just caught the perfect run that you weren't expecting. But on the higher time frames, if you've done your analysis and consistently over time you've developed a signal for when to express a long trade or a short trade, and you've captured that trend, um, there's a higher possibility that that's skill. And I think that skill starts to show up in the consistency of your P&L over time. So you need a long period of time. You won 3-5 years before you can truly say like, oh yeah, this is definitely the skill that I brought to the market, rather than it just being luck. I still wonder if like traders out there that have made $1 million in a short period of time because they took on some massive options contract, you might look at them as a genius, but you really have to wonder, did they just get really lucky, and
Mhm.
now that luck appears as expertise? So that's another question to ask.
Actually, I didn't get a chance to mention to you. I don't know if you're using the simple trend lines tool that we just recently released on TradersPost.
Yeah, I played around with it.
I have been loving it. It has helped me get out of so many bad decisions. I'd be like, "Why is the price moving in this location?" And then I'll have that on. I'd be like, "Okay, it's happening exactly here." I've been highly impressed with. I mean, not to pat myself on the back a little bit, but I've been highly impressed with that. And I'm in the process of doing a 2.0 version of that,
Mhm.
just because I'm okay. There's some quality of life for things I want for that, but it's fantastic. Along the lines with the confluence of alerts. I've been going back over the support tickets that we've had, and especially in Discord when people talk about it, and I'm realizing, okay, this is a huge shortcoming in all these different platforms, not being able to easily pair different conditions together. And it along those lines of, is it skill or is it luck? Once you're able to have these tools that actually allow you to test your idea, and you can actually see the move happen exactly where you would expect it to be, then
Mhm.
I know, okay, it's skill. Like, I actually did see that, and I did predict it, and I did have a level of which I thought it would go to, that's repeatable.
Yeah. Yeah. And I think that's why we recommend really long, robust back test, rigorously testing your approach, doing walk forward, because again, we're trying to determine whether or not this is just luck that your strategy worked for a week, the month that you tried it, and you're like, this is it. I've got the holy grail here. Well, let's keep trying it because it could still be luck.
We have a question here in the chat from Wayne Anderson, who's asking if there's any plans to add a daily profit and loss function.
Mhm.
This does come up um, uh, quite regularly. I know John has answered this many times, trying to. I'm assuming here the question is overall your account,
Yeah.
not necessarily per position. And if I understand correctly, there's some difficulty for that because there's no functions that are available from the brokers to accurately be able to say, okay, yeah, we need to close the positions that because this amount of profit or loss overall. Is that right?
We're going to use the last in last out approach with the history of orders, but from a technical perspective, what we have to do is basically download all of the orders that exist in everyone's accounts in order to determine that P&L accurately, because not all orders in the system come through TradersPost. So essentially, we kind of have to expand our reach in terms of what data we gather from the brokers. Then we can start to calculate when you got into a trade and you sold. When if you like, let's say you bought a share of Microsoft and then you sold a share of Microsoft, we pair that together as a trade, and then we give you the P&L for that. And let's say you open another share of Microsoft and sold it, that would be another trade that we monitor for you. Um, and obviously, when you overlap or pyramid into positions, there's this last in last approach where your last trade gets paired with the last that you executed. So the last buy you had gets paired with the last sell you made. So when you pair the trades together like that, it gives you a little bit more accurate or reflection of what your positions look like over time. Uh, so I think that's our aim. We want to build something that gives you P&L on all of the paired trades together. But we're going to have to do some work to pull that off, and then that will give you your P&L history on a daily basis, weekly basis, monthly, but just from a trade perspective. Now, we've already introduced the portfolio analytics in TradersPost. So if you go to your portfolio balances, we do some analysis on those balances to show you things like your Sharpe ratio, your max drawdown, things like that, the high level portfolio analytics. But as always, we are definitely always trying to look for new ways to give you more insights on how your trading is going.
As a offshoot to that, what if I was concerned about that I set my orders in too close together, that there's going to be race conditions there, that I might be stuck in a position that TradingView doesn't, it's not coherent with TradingView. Is there any mechanism or any fail-safe that you would recommend setting up so that, let's say anything went wrong, that no matter what, if a position fell by this amount, that the position would be closed, whether or not TradingView or TradersPost even knows that this position existed? There was a situation where I heard where somebody had a trade was still open, but they didn't know that it was still open because they were supposed to be. They sent two signals at the same time, and the position got one position stayed open when it should have closed, or they thought it should have closed. So I was just wondering, like, I know in TradingView, what I'll do sometimes is with a client, I'll always regularly send uh, a message through, an alert through that says any position that's open, just close it. Because I'm not expecting a position right now, so just close anything if it's not open, or close the position at the end of the day. Are there any fail safes like that that you'd recommend, either at the broker level or how to think about it in TradersPost, that just covers your bases in case you're in a trade that you didn't expect to be in?
Yeah. I mean, I think we could definitely integrate some kind of rule around that where, at the beginning of the trading day, if there's any open positions and you're expecting to start from a clean slate, you could probably add a rule on our side that closes any open positions. We don't have that functionality at the moment, but I think certainly if that's a request that comes up pretty frequently, it could be another tool we provide to sort of clean the slate, if you will, for your trading. I don't know that we have anything that would automatically find those types of scenarios. I think you would have to define when that would happen, and we could certainly execute that. But we would need to scope out what that looks like and add that as a feature.
Personally, to me, it seems like the sort of thing that I like to take care of at the broker exchange that I'm dealing with, or in the strategy side,
Mhm.
because if the whole idea is to make sure that in some outlier condition that you're covered, well, then you're even introducing another thing that you have to rely on. So better just to make sure that you're checking the accounts, that you have an eye on that, in order to make sure that you're the final arbiter of if a position should be open or closed.
Correct. Yeah, I think we would categorize this under normal maintenance for automated trading. It's not ever going to be like I set it up and I go to the Bahamas for 2 months. Like you still have to monitor what's happening in your accounts because there
That's right.
unexpected things can happen.
Yeah. So this is a question this is my question to you, Mike, which is, how useful do you think it is to learn multiple styles of trading? Or is it better just to focus on one, get better at that, and ignore the rest?
I'm all for starting your trading journey with one approach, something simple that you can understand, something that you can do consistently, because building a system around that takes a lot of time. If you try to spend your time building 15 different systems and 15 different asset classes, it becomes so much work that you're unlikely to actually find something that's going to work for you and actually get some consistency from. So in the very beginning, I would say definitely just stick with one thing. Stocks is probably your best choice. I would avoid any type of derivatives or leverage products because when you understand the math of leverage, you realize the danger you put yourself in very quickly, and you're more likely to fail rather than succeed there. So lower exposure, like some minimum capital to something like stocks, something that's sort of low volatility, even if it's just larger ETFs, and then build a system around that just to get the hang of the process. Over time, though, there are reasons to use other instruments, other styles of trading, because it starts to expose you to different moments in the market regimes, at different reasons that things are happening. There's options trades that can be used that can leverage opportunity in FOMC events. There are futures contracts that can be used to hedge your longer portfolio. There are trend following strategies and mean reversion strategies that are more specific to big volatility events or low volatility events. So as you expand your understanding of how the market changes its mood every day, you start to wonder, is there another way I can build a strategy that starts to capture those moments in the market? Then I think you start to move into something more sophisticated where you have a portfolio of strategies that are all trying to capture different reasons that things happen in the markets.
I talked myself out of a contract a couple of months ago, explaining to somebody exactly that. And they're like, because they thought they're going to build up the strategy, it would run, and they wouldn't have to think about anything else ever again. They're like,
Right.
it's going to run forever. They were like, I've been running this for 6 months, over 6 months worth of data, has a good profit ratio. I'm going to run this forever. And I explained, well, that's not going to be the case. You're going to probably going to need a set of strategies that you're activating, deactivating when you need to, blah blah blah. And once he realized that it was more work than he was willing to put in, he's like, let's just cancel this contract. I was like, damn, I shouldn't have said anything. But my brother, he reminds me, I don't know who's lifting this quote from, but tells me all the time, know 10 times more about the subject that you're dealing with than anybody else, the other people that you're playing against, because otherwise you have this level of ignorance there. Like, something moves inside of the market, you don't know why it moved, you
Yeah.
don't know what to watch out for. It's like going into I assume, I'm not a very sports person, but imagine someone going into a UFC fight and they have no idea of some other technique. they don't even know what they're up against, and they're like, okay, well then you're completely at the mercy of chance there. And so the when I first got into trading, I thought it was just all about technical analysis. I never even considered fundamental or event driven, or I didn't even have a granular idea of mean reversion or momentum or anything like that. And I just kept banging my head against the wall. Why isn't this working? Until I learned a trading strategy, until I learned about options, and I go, this is perfect.
Hmm.
I already lost immediately when I get in, so I already planned for my loss. And if I win, fantastic. This is exactly my personality. Why on earth was I sitting around with the normal technical analysis, or reading reports from gold essays for junior miners, trying to pick out what would be a good miner? It's like, no, this is the way I need to do
Yeah.
it. And so learning multiple styles can really help you, one, figure out exactly what works for you, and then
Yeah.
who you're fighting against.
Yeah. And then I think you kind of need to do some introspection to decide if you're a specialist or a generalist. I think we've seen that type of concept show up in the workplace, where some people are particularly skilled at one thing, and that's just what they do. And they're extremely knowledgeable on the subject, and they've gone very, very deep on the topic. That shows up in traders too. Like, I know one trader who shows up in the futures market, and his only interest is non-farm payrolls. That's it. Whatever the report shows on non-farm payrolls, he knows exactly what his bet's going to be, and he trades the last hour of the session, and that's it. And that's all he ever needs to trade, because it's the one thing he understands. There are many traders like that, where they might spend their entire career taking one type of style and one type of approach that's just work very well for them. I would consider them specialists then, because they know their domain extremely well. They know that part of the market very well. They know what to look for and what not to look for, and what to avoid. If I'm a generalist like me, or if you're generalist like me, then you're driven more by having a diverse set of options, something that you can learn about in multiple ways. I tend to be very attracted to learning new things, so I like going into new markets, because that teaches me something that I didn't know before, and I get really excited about that process. So I think knowing yourself is a big part of this too. You made the point of trying out a bunch of things until you see what fits, and I think that's a part of that process. But also knowing whether you're going to want to do multiple things at the same time, or if you just want to do one thing. Either one works. I mean, you just have to find the consistency.
That's right. Someone asked this question a couple of days ago. I thought I'd bring it back up, even though we talked about it last week, and that was, we're going to find out about upcoming Traders Post features. So just to remind everybody, inside of the documents on Traders Post, you can click on the releases on the sidebar, and that'll bring you to the top of the page. You'll be defaulted to upcoming release, and it has a bunch of the features that are being worked on, that are considered to be rolled out. Is there any idea of like, should anyone have an idea of like the frequency that this is updated at? Should they check it every week, every month?
I would say every couple of weeks. We do a release schedule every two weeks or so. This particular release is going to be done this weekend, unless something changes. We don't normally publish our release dates, but the moment it goes live, this release page does get updated. It'll come with the release date where everything was published, the date that it was done, in other words. And then, of course, sometimes we do email campaigns to let everybody know about new features that we've introduced, because sometimes releases also come with broker integrations, or new features that are really in demand. This particular release that's upcoming has a lot of new features in it, particularly around the JSON messages, how you can control options contracts, how you can control some of your orders. There's a lot more functionality here than we have even today. So that's going to be a big one to talk about.
Oh, that's so exciting. Just love when you feel like a 0.5 or a full point of a version that changes for a platform, and then you get to see how people like try to brick the system, like we were talking about before, and then that causes new
We
ideas.
just
And
added
it's just
300 more ways for people to break our system.
exactly, but it's what you want. Like, I mean, I see something like this, release like this, where just the robustness of what's there, the feedback that's taken from the customers, and how it's actually trying to be the best automated trading platform for people. And
Mhm.
you see that, and there's nothing that speaks more than, hey, they didn't actually have to add in this feature, but they know 5% of people want it, and it could be useful, and they're taking the time to do it. So to me, it's like just proof in the pudding that this is a product worth staying with.
Yeah. Thanks, Tom. It's a good testimonial.
Yeah, I keep forgetting that I work with TradersPost. I sound like you guys forced me to say all that. No, this is exactly what I think.
It's in your contract.
Along the same lines, sometimes we'll see beta next to our broker. So, what should people think about for that? Like, as far as should they put live capital with a broker that's in beta? How finished is the broker in beta? How much they can rely on it? That sort of thing.
Yeah, be very careful. So when we launch a new broker integration, we've done rigorous tests across all of their endpoints. But it's like anything, you've tried to account for 100 scenarios, but you didn't capture that 101st scenario. And so we keep things in beta as a warning that this should be used with paper trading for a while, just to confirm that everything you're trying to accomplish will work properly with the broker. And once we've seen enough tests come through, we've seen a lot of trades come through, there's no issues. It seems like everything's working exactly as intended, then we can take that broker out of beta. So it's in a trial period. We want to make sure it's behaving properly, that the broker is responding the way we expect, and so on and so forth. Definitely use caution.
Perfect. And is there any chance a broker? I guess it could always happen where a broker could be in beta and then it's pulled out for a little while and then come back in. I mean, I don't even know if it's ever happened with a Traders Post, but I can imagine that that could happen.
Nah, I don't think so. Because usually, we've done 99% of the work at that point. So the real objective at that point would be just to make the changes necessary to fix the problem and keep the broker integration going. We've never moved it back into beta before.
Understood. Fair enough. You guys are not Google. You're not going to remove products that you've told people exist. You're not going to Google wave the different features that you add to Traders Post. I like that.
Yeah.
And then finally, someone was asking, are Roth IRA with futures supported? I'll leave this up to you since I'm a Canadian who has no idea about any of this.
Fair enough. So Roth IRAs are a type of retirement account in the United States that are effectively governed, or the rules are governed by the IRS. And one of the rules in the IRS code around Roth IRAs is that you're not allowed to use a margin account. So because you're not allowed to use a margin account, you can't really do futures in a Roth IRA directly, because that requires some level of margin. You also can't do short selling in a Roth IRA because, again, that requires margin. However, you can go short the market, and you can access the futures market, and you can even access the options market in Roth IRAs. And the way to do that is through another product. So there are, levered futures product ETFs or ETPs out there that, if your broker supports, you would be able to expose yourself that way. You can short the S&P through the SQQQ, you short the NASDAQ through the SQQQ, for example. So there are products out there that are wrapped up as ETFs and ETPs that give you the kind of exposure you're looking for to take a trade in your Roth in that way. But of course, you're going to have to pay a small premium for that in the cost of an expense ratio. And it's not always available with every broker. If your broker does support it, then yeah, that would be the way to access it and still take the trade in a legal way. If it's supported through your broker, then it's supported through TradersPost. So you just need to check to see if those symbols are supported. And then, of course, you can set something up with us. I think
Excellent.
early on, we did an interview with one of our advisors, Sander Blue, and he has a strategy that's built on TQQQ and SQQQ in a Roth IRA. So it's totally possible.
Great. And finally, I wanted to end off with a question. This is something that's been on my mind a lot, which is if 80% of retail and traders fail, let's say that's generally the number that floats around, would you ever recommend that somebody trades? And then, like, under what circumstances would you recommend that for somebody?
If you have a burning desire to be in control of your investing decisions, I think it's a question of whether or not you want to be active or passive. Do I recommend being active? No, actually, I don't. I actually think most people probably should move to passive investing, and we see most of the world going that direction. A massive amount of capital in the markets right now is controlled through Roths and 401ks, and most of those investment choices are effectively passive. You're just dollar cost averaging into a low cost ETF or a mutual fund. every month. And so there's really no active investing decisions there. You're taking whatever the market can give you, and you're happy with the average every year. I became obsessed with this because I really enjoy the process of understanding markets and building strategies, investing in companies, researching new approaches. I just think it's fascinating. And even if I'm taking a small hit in the long run and maybe not outperforming the market, I'm still happy and content to be in this position because I enjoy being an active investor and trader. So I think it's a personal choice you have to decide on. You contend with that choice in your head. Are you willing to take on this type of risk? Are you willing to potentially underperform the market in the long run, which is very, very likely to happen for many, many people who get involved in this? And maybe one of the things I would offer, and I say this a lot to people I talk to about getting into trading, maybe take at least half the money or 75% of the money and just put it into the SPY or some low cost ETF, and then compete against the performance of that. If that's making you 12% a year, then try to beat 12% a year in an active account. It's really difficult to do, you'll find, as you start the process, because usually up front people take more risk than they probably should, and then they experience pretty big drawdowns, and it's really hard to recover from those drawdowns. It takes a really long time. So the process is such an educational journey. I've tweeted about this recently. I think I've learned more about myself as a trader than anything else I've ever done, because I've had to confront everything about my personality, about the way I think about things, the way I analyze things, the way that I stay consistent, the way I build a system. All of those steps along the way to getting to consistency have, in my opinion, made me a better person for myself. So it's a personal choice. You've got to decide whether you're willing to take those risks versus just doing something passive.
I've seen so in school, we're taught all kinds of different fields that we might not pursue because there's some inherently useful in learning about that subject. And for me, it's always like sports. When they put me in gym, I go, I can guarantee 100% I'm sitting behind a computer for the rest of my life. I will never pick up a ball if I don't need to. But obviously, it teaches you things that's super useful. For me, there's two things like that I wish were part of the curriculum, and it's what I try to teach my kids and stepkids. Stand-up comedy. Learn how to speak in front of people to make them laugh. It's way harder than you think, and you realize you actually have to pay attention to everything that you're doing. That's useful. But two is trading. Even if you're trading $5 for something, because the things that it teaches you of how to think about yourself, how to think about others, how to think about trends and markets, how to look for opportunities. I mean, it's just absolutely invaluable. Can you imagine a group of 17-year-olds who have to try to turn $100 into more by the end of whatever semester that they're in? Like what they would actually learn about who they are and what they can actually do.
Yeah.
To me, it's absolutely invaluable just on the basis of the techniques that you can learn and what you learn about yourself. So I would highly recommend anybody learn how to trade with the full expectation, just like in stand-up comedy, that you're going to bomb violently, and you could feel absolutely terrible, because you're going to feel that feeling in other moments in your life, and better to do it in a controlled environment where you're expecting it's going to happen.
So an interesting thing that I think I've discovered about you, Tom, is that you're most likely way more resilient than I am. And I think you've probably learned that resiliency through some of the risks that I've heard you take. I've taken some risks, some big risks in trading, and sometimes the process is really hard for me. And that's another thing I've learned about myself, is like how I overcome losses, and I've learned to overcome them differently than it was way early on in my career. So again, like to the point, there's just so many, I can't even enumerate the number of things I've learned about myself through this process.
Yeah, when I I was bragging about the 50x trade, leverage trade that I am in crypto. I'm like, oh, things going well, and then it's not going well, and then you get to like eat crow and see what it's like to have a literal log of your failures or successes, and then be able to tie future decisions based on it. You go, hey, wait, I shouldn't do this because I remember this feeling. I shouldn't cut off this person in traffic because I remember that feeling of, oh, I needed to get somewhere quick and taking a shortcut, and that didn't end well. So how about I just wait at this red light and not speed forward? it's just been useful in every part of my life,
Yep.
except of course making money. It's the one part that it's not actually useful for me.
Except for making money. Well, the I feel like if you spent your career in sales, there's some part of your career where you can kind of be a bullshit artist, right? Like you can get away with just kind of fudging the numbers, kind of fudging the details, but the market is like the absolute level set for any of that nonsense. You're either going to get the right trade or you're not going to get the right trade, and you're going to get slapped if you make the wrong decision. There's no bullshitting your way through this stuff.
Exactly. Oh, that's why I love it so much. All
Yep.
right. Well, thank you very much for that. Always a pleasure to speak to you, Mike. And as always, we love to answer the questions that you, clients of Traders Post, ask. As always, you can always post your questions on Twitter, send us an email, or post in Discord. We're always looking out to make Traders Post the best automated trading platform for you and your trading needs. So we'll say happy weekend and happy June, and we'll see you guys next Friday.
Sounds good. Thank you, Tom. Cheers.